Hello everyone, welcome back. I'm Namrata Arora, and today in this video we're going to talk about the top 5 liquid funds. So just like equity funds are synonymous with mutual funds, liquid funds are synonymous with debt funds. And these are one of the oldest and the most famous categories of debt funds which are available for investors. So what makes liquid funds so special and the most sought after debt funds? So liquid funds basically are those funds which invest in debt instruments or bonds with a leftover maturity of less than 91 days. So what are some of the debt instruments that liquid funds invest in? So first, they invest in commercial papers. So most liquid funds invest in commercial papers. This is one of the type of papers which most of the funds invest in. Commercial papers are basically loans which are borrowed by companies or by NBFCs for short term. Next is certificate of deposits or CDs. These are basically loans which are borrowed by banks for short term. And then you have treasury bills. Treasury bills are basically debt instruments or papers which are offered by the government for a shorter period. Now, if we look at these 3 debt instruments that we have spoken about, I'm sure all of you understand that investing in or lending money to a company or to an NBFC is more risky compared to lending money to a bank or to a government. Therefore, commercial papers end up giving higher rate of interest, which is why most liquid funds invest a portfolio of their money into commercial papers with higher credit rating. So it could be A1 plus or AAA rating. So now the next question is, why are liquid funds ideal to invest for say 7 days to 60 days? So most of the liquid funds invest in debt papers which have their maturities ranging from 1 day to 91 days, which means the average maturity of the portfolio would be about 30 to 45 days. Now, if an investor were to redeem his funds below 7 days or before 7 days, he would have to pay an exit load, which would obviously bring down the overall returns on the portfolio. And if the investor was to stay invested beyond 60 days, then for beyond 60 days, there are other debt funds which are available which can give better returns. Now let's understand what is the risk involved in liquid funds. So generally, liquid funds are considered to be the safest mutual funds which are available. So liquid funds generally invest in debt instruments with very good credit rating. So that could be say A1 plus or AAA. Now this is the best possible credit rating that's available. So which means that the risk of default in liquid funds is very low. Also, the debt instruments or the papers which the liquid funds invest in are generally held till maturity, which means the interest rate risk or the market risk of the portfolio is also very low. So in a nutshell, you need to understand that liquid funds carry very low interest rate or credit risk. So now the question is, how can we as an investor make use of liquid funds? So any investor who's looking to enter equity market systematically via STP, which is systematic transfer plan, can first park their funds in liquid funds of the same fund house and then systematically transfer their funds from liquid funds to a pre-decided equity fund. Also, investors can look at parking the emergency fund in liquid funds because liquid funds are ideal for short term, say for 7 days to 60 days kind of an investment horizon. So now I'm sure you must be wondering how much return can we expect from liquid funds. So generally, investors tend to compare the return from liquid funds with 1-year FD returns. But I think that would be a little unfair because liquid funds are for a very short duration. So when you're comparing it with fixed deposit, you should look at fixed deposit returns for 7 days to 2 months. And liquid funds generally give slightly higher returns compared to FD returns in that particular time period. So now let's look at the top 5 liquid funds based on the last 1-year performance. And we have taken the direct plan growth option, and the returns are calculated from May 2021 till May 2022. So based on this, the top 5 liquid funds that are available are Quant Liquid Fund, Navi Liquid Fund, Baroda BNP Paribas Liquid Fund, Mahindra Manulife Liquid Fund, and JM Liquid Fund. So before we deep dive into understanding each of these funds individually, just to give you a reference, in the last 1 year, the fixed deposit returns for a period of 7 days to 45 days has been 2.5% to 2.9%. So if we look at all the top 5 funds that we're going to be talking about, they have delivered returns which is higher than this particular FD return that we're talking about. So all the data that we're going to talk about is as of 30th of April 2022 and the returns are as of May 2022. So we'll start with Quant Liquid Fund. So if we look at the numbers, the 1-year return of this fund is 4.03%. The fund size or the AUM is 576 crores. The expense ratio under the direct plan is 0.29%. The credit profile of the portfolio, which is very important for us to understand. So this fund basically invests a big chunk of the portfolio in AAA or A1 plus papers, which is about 74% of the portfolio. It invests 6% in treasury bills and holds 20% in cash. The average maturity of the portfolio is about 41 days. Now, this fund has invested in relatively longer maturity papers, and that could be one of the reasons why it has generated better returns. Now, let's look at Navi Liquid Fund. Navi is one of the newest AMCs on the block, and it recently acquired SL Mutual Fund. If you look at Navi as a fund house, it is spearheading in terms of providing passive funds to the market. So if you look at some of the numbers of Navi Liquid Fund, the 1-year returns are 3.82%. The fund size or the AUM is 88 crores. The expense ratio under the direct option is 0.15%. If you look at the credit profile of this fund has invested a large chunk of its investments in cash. That's almost 54%. AAA and A1 plus papers are about 35% of the portfolio and treasury bills about 11% of the portfolio. The average maturity of the portfolio is 29.2 days. Now let's look at Baroda BNP Paribas Liquid Fund. So of the 5 funds that we are discussing in this video today, the top 5 funds, this particular fund has the largest AUM, or it's the biggest fund in terms of size, with an AUM of close to 7,000 crores as of end of April 2022. So if you look at the numbers, the 1-year return of this fund is 3.55%. The fund size or the AUM is 6,968 crores. The expense ratio under the direct option is 0.16%. If you look at the credit profile, this fund holds 77% of the portfolio in AAA or A1 plus papers and about 18% in treasury bills. And the average maturity of the portfolio is 33 days. Next, let's look at Mahindra Manulife Liquid Fund. Now, compared to the other liquid funds that we are discussing, this fund has highest allocation to treasury bills, which means this fund carries good liquidity. So if we look at the numbers, the 1-year return of this fund is 3.53%. The fund size or the AUM is 1,607 crores. The expense ratio under the direct option is 0.14%. And if you look at the credit profile, this fund holds 73% of the portfolio in AAA or A1 plus papers, 24% in treasury bills, and about 3% in cash. And the average maturity of the portfolio is 34.2 days. Now, the last fund in the top 5 liquid funds that we are discussing today is JM Liquid Fund. Now, this is one of the oldest funds out of the 5 funds that we've discussed. So if you look at the numbers, the 1-year return is 3.52%. The fund size or the AUM is 2,464 crores. The expense ratio under the direct option is 0.15%. The credit profile of the portfolio is this fund carries 61% of the portfolio in AAA or A1 plus rated papers, 21% allocation is given to treasury bills, and about 18.3% in cash. The average maturity of the portfolio is 33 days. So in this video, we have discussed the top 5 liquid funds based on 1-year returns. But apart from returns and expense ratio, one of the other important parameters that we should consider while selecting a liquid fund is the fund size or the AUM. So on your screen, what you see is a list of the top 5 liquid funds based on the fund size or the AUM. So I hope you've liked this video. If you've liked this, of course, hit the like button, share it with everyone, and of course, subscribe to the Groww Mutual Fund channel. And of course, please do not take any of these funds as our advice or as our recommendation. Thank you so much for watching.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.